I still have the memos. All three of them. I wrote them in April 2018, March 2019, and February 2020, each one addressed to the engagement partner, each one flagging the same issue, each one ending with a recommendation that we qualify the audit opinion. I signed the audit anyway, all 3 years. My name is David Crane. I was a senior audit partner at Hargreaves & Partners LLP, mid-tier firm, 12 partners, offices in Leeds, Manchester, Birmingham. We weren't Grant Thornton. We weren't trying to be. We had good clients, regional businesses, manufacturing, construction, property development, solid work, clean work. Until it wasn't. Between 2017 and 2019, Hargreaves & Partners conducted the statutory audit of Meridian Construction Group, regional contractor, based in Sheffield, reported revenues of $340 million in 2017. Meridian built hospitals, schools, council housing blocks, public sector work, mostly. They'd been our client for 11 years when I took over the engagement. I was proud of that assignment. In April 2018, during the audit of the 2017 accounts, I identified that Meridian's revenue recognition methodology was materially incorrect. They were recognizing revenue based on billing milestones written into contracts, 25% at project start, 50% at halfway, 75% at substantial completion, rather than on actual work performed. So when a contract said they could bill 50% at the halfway point, Meridian booked 50% of the contract value as revenue, even if they'd only completed 38% of the actual work. I reconciled their reported completion percentages against site progress reports, supplier invoices, subcontractor payments, actual labor hours logged. The gap was consistent across every major contract. By my calculation, Meridian had overstated revenue by $78 million in 2017. I wrote a memo, 4 pages. I laid out the methodology error. I attached the reconciliation schedules. I noted that the overstatement was material to the financial position. I recommended we qualify the opinion or request that Meridian restate their revenue recognition policy. I sent it to Graham Whitfield, the engagement partner, my direct superior. Graham called me into his office 2 days later. He didn't say the memo was wrong. He said it was accurate. He said I'd done good work. He said the issue was real. Then he said we weren't going to qualify the opinion. He said the methodology was an industry-wide grey area. He said construction revenue recognition was always a judgment call. He said the auditing standards allowed for professional discretion. He said the FRC guidance on materiality was deliberately flexible. He said that, in context, the adjustment wasn't material enough to warrant a qualification. I said $78 million is material in any context. He said Meridian was one of the firm's 5 largest clients. He said they paid $140,000 in audit fees annually, plus another $90,000 in advisory work. He said if we qualified the opinion, they'd move to another firm. He said the firm couldn't afford to lose $230,000 in annual revenue. He said I was technically correct, but commercially naive. I signed the audit opinion on April 19, 2018. I have a very clear memory of that morning. I was sitting in my office. The opinion was printed on firm letterhead. 2 pages, blue ink. My signature goes on the bottom of the second page, right below the standard wording. In our opinion, the financial statements give a true and fair view. I held the pen for maybe 30 seconds. Then I signed it. I told myself Graham was the engagement partner. He had final authority. I'd flagged the issue. I'd done my job. If he wanted to overrule me, that was his decision. Not mine. In March 2019, during the audit of the 2018 accounts, I identified the same issue. Meridian hadn't changed their methodology. The gap had widened. By my calculation, they'd overstated revenue by $105 million in 2018. I wrote another memo, 5 pages this time. I included the previous year's memo as an appendix. I noted that the issue was recurring. I noted that the overstatement was increasing. I recommended, again, that we qualify the opinion. Graham called me in again. This time he didn't say I'd done good work. He said I was becoming a problem. He said I was creating unnecessary risk for the firm. He said flagging the same issue twice in writing was building a liability trail. He said if the FRC ever investigated, those memos would be the first thing they'd find. I said that's why we should qualify the opinion. He said if I felt that strongly about it, I could step down from the engagement. I didn't step down. I signed the audit opinion on March 22, 2019. In February 2020, during the audit of the 2019 accounts, I identified the same issue. The gap had widened further. By my calculation, Meridian had overstated revenue by $129 million in 2019. I wrote a third memo, 6 pages. I attached the previous 2 memos. I noted that the overstatement had now exceeded 1/3 of reported revenues. I noted that Meridian's cash flow statements showed increasing reliance on short-term credit facilities. I noted that several major contracts were running significantly over budget. I noted that the revenue recognition issue was masking what appeared to be severe operational distress. I recommended we qualify the opinion. I also recommended we consider whether the going concern assumption was still appropriate. Graham didn't call me into his office. He sent me an email, 1 line. Sign the opinion or resign from the firm. I signed the audit opinion on February 28, 2020. Meridian Construction Group entered administration on March 11, 2021. Total creditor exposure was $181 million. The administrator's report identified revenue overstatement as the primary cause of insolvency. Meridian had been booking revenue on contracts they couldn't complete. They'd been using the inflated revenue figures to secure credit lines. When the contracts came due and the work wasn't finished, the cash didn't exist. The credit lines were called. The company collapsed. The Financial Reporting Council opened an investigation in May 2021. In September 2021, Hargreaves and partners disclosed my memos to the investigation. All 3 of them. Graham told the investigators he'd instructed me not to write them. He said I'd disregarded his instructions. He said I'd created the liability trail deliberately to protect myself. That wasn't true, but it also wasn't entirely false. I cooperated fully with the investigation. I provided all my working papers. I sat for 2 interviews. I answered every question. I didn't have a lawyer present. I didn't think I needed one. In the first interview, the lead investigator asked me a very simple question. If you believed the opinion was wrong, why did you sign it? I've been asked that question in different forms maybe 200 times since then, by the FRC, by my wife, by former colleagues, by the journalists who covered the case, by myself mostly. I still don't have an answer that makes sense. The honest answer is, I believed Graham had the authority to overrule me. I believed the firm's position was defensible under a strict reading of the materiality standards. I believed that if I refused to sign, I'd lose my job and nothing would change. Someone else would sign it. But the other honest answer is, I knew the numbers were wrong, I knew they were materially wrong, I knew the opinion was false. I signed it anyway. Both of those things are true. I have been trying to explain how both of those things can be true for 3 years. The FRC concluded its investigation in March 2023. Hargreaves and Partners was fined $1.2 million and removed from the register of statutory auditors. The firm dissolved 4 months later. Graham Whitfield's practicing certificate was revoked. He's appealing. My certificate was suspended for 5 years. I didn't appeal. I haven't worked in audit since. I do bookkeeping now, small businesses, sole traders. I prepare management accounts. I reconcile VAT returns. It's fine work, honest work. No one asks me to sign anything I don't believe. There's a detail I think about often. In the third memo, the one I wrote in February 2020, I included a sentence I'd never put in writing before. I wrote, "If we sign this opinion, we are complicit in the concealment of insolvency." I wrote that sentence. I sent the memo. I signed the opinion 13 days later. I don't know what I thought would happen. I think I thought that writing it down would be enough, that creating the record would be the same as acting on it, that if I documented my objection clearly enough, the decision wouldn't be mine anymore. I was wrong. The investigators asked me in the second interview whether I felt responsible for the collapse. I said no. Meridian's management made the decision to misstate the revenues. Graham made the decision to sign off on it. I was following the chain of command. The investigator didn't say anything for maybe 10 seconds. Then he said, "You're a chartered accountant. You signed the opinion. Your signature is on the audit report. Whose decision was it?" I didn't have an answer to that. I still don't. I keep the memos in a folder in my desk drawer. I don't know why. I've read them maybe 50 times. They're very precise. The concerns are clearly stated. The recommendations are unambiguous. The numbers are correct. They are also completely useless. Because I wrote them and then I did the opposite of what they recommended, and no one stopped me. My wife asked me once why I didn't just refuse, why I didn't just say no. I told her I thought about it. I told her I came very close. She asked what stopped me. I said I didn't want to lose my job over someone else's problem. She said, "Whose problem was it after you signed?" I didn't answer. The $181 million in creditor claims, most of them were subcontractors, small firms, electricians, plumbers, groundworks contractors, family businesses. They'd done the work. They invoiced Meridian. Meridian didn't pay them because Meridian didn't have the money. The money never existed. It was on the balance sheet. It wasn't in the bank. 43 of those businesses went into administration within 6 months of Meridian's collapse. I don't know how many of those were avoidable. I don't know if any of them were avoidable. I know that if I'd refused to sign the 2017 opinion, the issue would have surfaced 3 years earlier. The creditor exposure would have been smaller. Some of those firms might still exist. I also know that if I'd refused, someone else would have signed it. I know both of those things are true. The last time I saw Graham was at the FRC hearing in January 2023. He didn't look at me. His lawyer spent 40 minutes arguing that the materiality threshold for revenue misstatement in construction accounting is inherently subjective and that the firm's interpretation was within professional norms. The panel didn't find that persuasive. Neither did I. But I also don't know if he was wrong. The standards are subjective. The guidance is flexible. Materiality is a matter of judgment. Those are all true statements. They're also the reason the system fails. Because if everything is a judgment call, then no one is ever responsible for making the wrong judgment. Until someone is. I've thought about this constantly. What would have happened if I'd refused to sign? Graham would have removed me from the engagement. He would have signed it himself, or assigned another partner. The opinion would have been issued. Meridian would have continued operating. The collapse would have happened anyway, just with a different name on the audit report. That's the scenario that feels most likely. But there's another scenario. If I'd refused, and if Graham had to escalate the decision to the managing partner, and if the managing partner had decided the risk was too high, then maybe the firm qualifies the opinion. Maybe Meridian's lenders see the qualification and call the credit lines early. Maybe the collapse happens in 2018 instead of 2021. Maybe the creditor exposure is $60 million instead of $181 million. Maybe 43 businesses don't fail. Maybe. I'll never know. Here's what I do know. I wrote 3 memos. I documented the problem clearly. I recommended the correct course of action. I was overruled. I signed the opinion anyway. All of those things happened. I didn't break any rules. I followed the chain of command. I deferred to the engagement partner's authority. That's how the system works. The system failed. I was part of the system. The question I keep coming back to is this: at what point does following the process become the same as following orders? At what point does documenting your objection become a way of pretending you didn't consent? At what point does your signature stop being your responsibility? I think the answer is it doesn't. Your signature is always your responsibility. Even when someone else told you to sign. Even when refusing would have cost you your job. Even when you genuinely believed someone else would sign it if you didn't, it was still your signature. I think about the subcontractors sometimes, the ones who went under. I wonder if they know my name. I wonder if they've seen the FRC report. I wonder if they know that someone inside the process tried to stop it. I wonder if that matters to them. I don't think it does. Because I didn't stop it. I wrote memos, I documented concerns, I built a record that shows I knew. And then I signed. I still have the memos. I don't know what I'm supposed to do with them. They prove I was right. They also prove I knew I was wrong when I signed. I think that's what I can't reconcile. Not that I made a mistake. Not that I misjudged the materiality, not that I trusted the wrong person. That I knew. I knew the numbers were wrong. I signed the opinion anyway, and I thought that documenting the fact that I knew would somehow make it not my fault. It didn't. The signature was mine. It's still mine. The call came on a Thursday. March 14th, 2019, 3:47 in the afternoon. I remember because I was supposed to leave at 4. My daughter had a concert. School orchestra, she played violin, second chair. It was Malcolm Hendry, senior partner. He didn't usually call me directly. He said we needed to finalize the Westmark opinion by end of day. I said I still had questions about the revenue recognition, about the timing of the infrastructure contracts, about whether the stage completion percentages matched the actual work certified. He said Brian Coulter had reviewed everything. Chief Operating Officer. Malcolm said Brian had confirmed all the figures. I said I'd seen the site reports. I'd read them. 3 of the contracts showed completion percentages over 60%, but the independent quantity surveyor's assessment put them at 40%, maybe less. Malcolm asked if I was calling Brian Coulter a liar. Those were his words. Are you calling Brian a liar, David? I said no. I said I wasn't calling anyone a liar. I said there was a discrepancy. I said I needed time to understand it. He told me Westmark was announcing results on Monday. He told me the opinion had to go out Friday morning. He told me we'd been working on this audit for 4 months, and we couldn't hold up the entire process over a timing difference that would resolve itself in Q2. I said it wasn't a timing difference if the revenue had been recognized prematurely. He said Brian Coulter had 23 years of experience in construction management. He said I had the signed management representations. He said we had a duty to our client to deliver on time. He didn't say I'd lose my job. He didn't have to. I called Brian Coulter myself after I hung up with Malcolm. 4:12. I still had time to make the concert if I left by 4:45. Brian sounded annoyed. He said we'd been over this. He said the completion assessments were based on internal engineering reviews. He said the quantity surveyor's report was preliminary. He said it didn't account for works that had been completed but not yet formally certified. I asked him to put that in writing. He laughed. Not a pleasant laugh. He said, "David, we've given you everything we're going to give you. Malcolm told me you needed assurance. I'm giving you assurance. The figures are correct." I asked him again. For the email. For something I could put in the file. He said, "You have my signed representation letter. You have Malcolm's confidence. What you don't have is the authority to hold our entire reporting process hostage because you want to pad your working papers." Then he said something else. He said, "If you can't sign this opinion, David, I'm sure we can find someone who can." I missed the concert. I stayed until 7. I went through the working papers again. I looked at the contracts. I looked at the stage completion schedules. I looked at the revenue recognized in Q4. 83 million. Across 3 contracts. If the quantity surveyor was right, maybe 5 million of that shouldn't have been recognized until Q1 or Q2 of the following year, which would have turned Westmark's profit into a loss, which would have triggered covenant breaches on their credit facility, which would have... I knew what it would have done. I drafted an email to Malcolm. I laid it all out. The discrepancy, the risk, the insufficient evidence, the recommendation that we qualify the opinion or delay until we had independent verification. I got to the end. I read it back to myself. I didn't send it. I wrote the memo instead. The one that's in my files. The one that documents my concerns. The one that says I advised caution. The one that says I raised the issue multiple times. The one that protects me. Except it doesn't. Because the next morning, Friday, March 15th at 9:23 a.m., I signed the opinion. Unqualified, clean. I signed it because Malcolm was standing in my office. I signed it because he'd already told the client it was coming. I signed it because I had 3 children and a mortgage and 19 years with the firm. I signed it because I told myself Brian Coulter knew his business better than I did. I signed it because I told myself the discrepancy might actually resolve in Q2. I signed it because I told myself that if I didn't, someone else would, and at least I documented the concern. Westmark announced on Monday, March 18th. Share price went up 11%. They drew down another $4 million on their facility. They paid bonuses to the executive team. Brian Coulter got $140,000. In May, the quantity surveyor issued his final report. The 3 contracts were at 38% completion, not 60%. Westmark tried to suppress it, claimed it was based on outdated information, commissioned their own review. By July, the lenders were asking questions. In September, Westmark announced they were restating Q4. The $8.3 million in revenue became $4.1 million. Profit became a loss of $2.9 million. Covenant breach. The facility was pulled. In November, Westmark entered administration. 47 direct employees. Subcontractors on 6 active projects. 3 of those subcontractors went into liquidation themselves within 8 months. I don't know how many people that was. I never looked it up. I think I didn't want to know the number. The FRC opened an investigation in January 2020. They interviewed me in March. The irony of the timing wasn't lost on me. Exactly 1 year. They asked if I'd had concerns about the revenue recognition. I said yes. They asked if I'd raised those concerns. I said yes. They asked if I'd documented them. I showed them the memos. They asked why I'd signed the opinion if I had unresolved concerns about material revenue recognition. I didn't have an answer. I mean, I had answers, I had explanations, I had context. But I didn't have an answer. The report came out in October 2021. Misconduct admitted. $80,000 fine. 18-month suspension from signing audit reports. Malcolm got 24 months and $120,000. Senior partner, greater responsibility. Brian Coulter wasn't sanctioned by the FRC. He's not an accountant, but he was disqualified from serving as a director for 6 years. He appealed. I don't know how that turned out. I didn't appeal. What would I have said? That I was pressured, I was. That I relied on management representations, I did. That I documented my concerns, I did. That I believed someone else would sign if I didn't? Maybe. Probably. But I'm the one who signed. My name, my professional designation, my judgment. I'm the one the market relied on. I'm the one who said the financial statements showed a true and fair view, when I knew they didn't. The suspension ended in April 2023. I could sign opinions again. I don't. I'm still with a firm. Different firm, smaller. I do technical reviews, advisory work. I don't lead audits. I tell myself it's a choice. My daughter asks me sometimes about what happened. She's older now. She understands more than she did. She asked me last year if I thought I'd done the right thing by telling the truth to the investigators. I told her I did. She asked if I thought I'd done the right thing before that. I told her no. I think that's the only thing I'm certain of. That there was a moment, a specific moment, when I could have said no. March 15th, 2019, 9:23 a.m. Malcolm was in my office. The opinion was on my desk. I could have refused. I would have lost my job. Probably, almost certainly. But Westmark wouldn't have announced on false numbers. The lenders wouldn't have advanced another $4 million. The subcontractors wouldn't have kept working on the promise of payment. 47 people wouldn't have lost their jobs when the company collapsed. Or maybe they would have. Maybe Malcolm would have found someone else to sign. Maybe the outcome would have been exactly the same, just with someone else's name on the report. Maybe. But it wouldn't have been my name. It wouldn't have been my signature. It wouldn't have been my decision. That's what I can't reconcile. Not that I couldn't stop it. That I didn't try. I documented my concerns instead of acting on them. I protected my position instead of protecting the public. I valued my career more than my judgment. The memos are still in my files. Sometimes I think I should destroy them. They don't prove what I thought they proved. They don't show I tried to do the right thing. They show I knew what the right thing was, and did something else. I keep them anyway. I'm not sure why. Maybe because they're the only record of the person I thought I was, before I found out who I actually was. When it mattered,